Let's introduce our guest for today. So joining us today on the fundamentals, we have Prashant Tapse along with Gaurav Sharma, who joins on the technicals. Hello, good evening, gentlemen. Thank you for joining us again on Ask Profit. I'll take up the first query. We'll go firstly to Kavita, who's writing us from Chennai, and she's bought about 2,500 shares of SJVN at a price of 115. Wants to understand whether she wants to hold or sell on this counter. Now currently facing a loss of around 68,000 on this one. Let me go across to both the guests for this conversation. So firstly, Prashant, I'll come to you on the fundamentals of SJVN.
I'm very positive on the power as a sector. Again, SJVN is a very much big in terms of hydro power projects. So with respect to considering the projects which they are into and the expansion plan which they are into right now, I think fundamentally the valuations are very much comfortable for a long-term investors to add more at this point of time again. But obviously one should consider the gestation period of any projects which will be in the power. It will take its own time. 2 to 3 years can be a minimum time. One should focus more on having SJVN in his portfolio. So overall, I think one can have a buy and hold for this product at this point of time.
Buy and hold is something that we are looking on the fundamental side, but Gaurav, I'll take your technical check as well for a counter like SJVN.
Even I am bullish on the power sector on the whole, and as far as this specific counter is concerned, this also looks quite attractive. It has retraced to the 61.8% mark as per the Fibonacci retracement theory, which is quite a healthy retracement. Currently, it is available at a reasonable cut. Previously, it was trading somewhere around 160 odd levels. Currently, it is at 87. So these are good levels to hold on to your position. Even I would suggest if the viewer is having some spare capital to invest in, so fresh investment is also suggested at current point.
Okay, thanks for that view. With that, we have another WhatsApp query from Kiran. He's writing to us from Dubai, and he's saying whether it's the right time to buy Titan stock. Are these the correct levels to enter? So currently it's trading at 3,079 and was down over 1% today. But since 4th of February, if I'm looking at the charts, it has seen a sharp fall. So firstly, I'd like to come to Prashant on the fundamental side. Are you bullish on this particular company, Prashant?
Yes, fundamentally, I'm very much bullish on this company with respect to the consumption story which we are thinking of coming next financial year because of the budget consumption allotment. So I think this would be the right candidate to be in terms of valuation as well as in terms of growth, in terms of volume. So I think one should really target this company for a short term as well as long term. For me, the target would be anywhere between 3,300 and 3,400 for short term and 3,500 for the long term. So overall, the consumption story is rightly priced and rightly timed, and 3,080 would be a right price to accumulate more.
Okay, and Gaurav, do you also hold the same view for short term?
Somewhat little different with what Prashant is suggesting. Technically, the stock looks just okay around these levels, but sustenance below 3,000 mark will open the gates for the further decline towards 2,800 odd levels. So I would suggest that if the viewer is having a short-term view, better take a stop below 3,000 mark and then try capturing the stock somewhere around 2,800 mark.
Okay, so that's the view for Titan that we are looking at on both the fundamental and the technical side. But another query that we have from Dubai, and this is from Sarath Babu. He wants to understand whether he should buy Zen Technology at current levels. Just to give more information on this stock, if he is looking at Zen Tech, it has fallen over 40% in the last few months. In fact, this was after the company had clocked in about a 52-week high, if you can point it out. So currently the stock was up, and we have seen a significant downtick for this stock, especially after its Q3 numbers, in which the company had reported basically no order inflow. So there were a couple of issues, there are a couple of concerns on the order inflow side, whereas the revenue numbers continue to remain healthy. Firstly, I'll go to Prashant on his view for something like a Zen Technology, because overall defense, there has been overall correction in this pack. What's your view on this?
Fundamentally, again, very positive on the company. Obviously, you were right in pointing out with respect to the quarterly earnings. The numbers were not so good in terms of EBITDA. Again, it was less below the Q2 earnings. It was almost 29% versus 33%, and versus Q1 earnings, which was 44%. There are multiple reasons. I think there were 2 to 3 company has acquired, so that acquisition cost, a lot of synergies have been still under cost. So I think the margins will be under pressure. Obviously, this year it may be ending anywhere between 25 to 30% in terms of EBITDA. Obviously, next year the 3 companies which their company has acquired, that will start giving lot of growth in terms of top line, as well as the synergies will help the company to clock again a 40% EBITDA going forward next financial year. So that would be the one reason why I think one should start accumulating this stock with a target of 1500 for at least 6 months to 12 months from current levels.
Okay, a target of 1500 is what we are looking on the fundamental side. But Gaurav, I want to take your view also. Overall on Zen Tech, are you positive or negative on the stock? And even if you have any picks in the defense space?
See, Zen Tech has witnessed very steep correction from 2600 odd levels to 1000. And now what we are seeing is just a pullback. So if it is just for someone who is having a huge risk appetite, then yes, one can consider the stop loss is little deep, around 1000 odd marks, but the upside is also quite humongous. If the stock continues the up move, it has potential to rise up to 1600 mark as well. Having said that, it is still a counter rally to the ongoing decline that we have witnessed in the past 1.5 months.
All right. Thanks for that view on Zen Tech, Gaurav. With that, let's go across to a first caller on the show. He's calling us from Doha. So first international caller, in fact. Hi, Rao. Good evening. How can we help you? Rao, am I audible?
Yes. Good evening. I'm holding HUDCO stocks of 400 numbers.
Okay.
As I explained to you, I bought it. I gave it in my buy rate earlier. I closed it. So my buy rate is 282.
Okay.
Do I need to hold, or do I need to average this?
And when did you buy it exactly?
I don't remember, but current price average is 282. I'm holding 400 numbers.
Right, because you're sitting on a loss of almost 40,000. There is what I can see. And Prashant, I'll come to you first on the fundamental aspect. Currently it's trading at 182, and since December, it has seen a downward trend, and the stock has witnessed a beating, a clear beating. So do you see it recovering and going back to 280 levels at which Rao had probably bought in the future?
I think obviously yes, in future, I mean into say 12 months plus, the cost can recover very fast, but obviously one should focus more on the earning visibility. I think Q3 numbers were not so good. It was very much neutral in terms of market expectations. Q4 would be a wait and watch for me. I think I would advise him to hold for the stock again. Let's see how Q4 earnings will come and the full financial year of 2025. So I think that would be giving very clear assumption of going long in this stock. But if he has some kind of additional capital, I think one should try to accumulate more on this, because I am very much bullish in the housing sector and the financing sector, where HUDCO is really big in terms of funding. So I think again the more focus would be on the government projects. Obviously, going forward, the first half of next financial year, a lot of government capex will be compared with last year. Again, this next financial year we'll have a lot of capex spending from the government. So HUDCO will be the beneficiary, and I think the cost will come by next 12 months.
Okay, and Gaurav, what do you have to say on the Bajaj housing space, firstly, and secondly, HUDCO? Are you optimistic about this particular counter for short term?
See, first I'll address Bajaj housing. Yes, a little bit of accumulation is being witnessed at current levels. So if Bajaj housing, if we consider with a short-term perspective, so it is better that we wait for some more time, let it go past 120 levels, sustain above that mark, then one should start adding the stock with rise, not right now. Because 120, if taken out, the immediate upside level would be somewhere close to 135 odd levels. So short-term trading can be done in Bajaj Housing Finance around that range. Now coming on to the HUDCO query, as of now, I do not see any meaningful reversal signs in this particular space. So for short-term trading, I would suggest it is better to avoid. Look for the right levels in Bajaj Housing Finance, and then consider that. Avoid HUDCO as of now.
Okay, so that's the view for HUDCO that is in focus. Now next we have a caller joining us, and this is Neeraj from Mumbai. Hi Neeraj, how can we help you on the show today?
Ma'am, hi, good evening. How are you, ma'am?
I'm good, how are you?
All well, ma'am.
Yes, please state your query.
Ma'am, there are two queries is there. First is the stock is PI Industry.
Right.
for 3 years down the line, ma'am, what would be whether should I purchase right now?
So you're looking for a fresh entry in the stock.
Fresh purchase. Right,
and what's the kind of horizon period that you're looking for?
Ma'am, I want to make my money 5 times here. If
Okay, so a longer period.
Yeah, within 5 years, I want to make my money 5 times, ma'am. Is it possible?
Okay, let me take this across to our guest.
Ma'am,
please add.
Or any stock which my money get 5 times, ma'am. Multibagger.
Okay, a multi-bagger is what we are looking for. Let me take it across to Prashant. I want to understand from you outlook on PI industry. Now, just today we had some recent data which pointed out that the export clients might be facing some kind of a pricing pressure on this one. Want to understand your outlook for not just this 1 year but over a 3-year perspective. Are you constructive on this stock? And again, as Neeraj was stating, any multi-baggers that you have in mind out there?
I think, yes, I will go with a very conservative outlook on PI right now because agrochemical space is a very interesting space for me. And I think it's a long-term story, not a short-term one. I think the way you said it with respect to pricing pressure, I think obviously, yes, it has been very visible in terms of its business update from last 2 months, January as well as February. So we are waiting for the March month business update, which will give us a very clear idea how Q4 earnings will be presented. So overall, the trend, the valuation is still expensive. I think with a 30 forward P, I'm not so comfortable to have a buy call at this point of time. I will still wait more because a lot of other ratios are good, but I will wait for the Q4 earnings, which will give us a very clear idea how this pricing pressure is panning out in terms of their EBITDA margins as well as their PAT margins. With a very clear long-term view, 2 to 3 years, obviously with 15-20% as a CAGR ROI in the company, I think obviously yes, I can expect on this. But his expectation is too high with respect to multi-bagger story. But PI industry may not be the right candidate for him. It can be a multi-bagger story for 5 to 10 years story, but obviously his view is very short, 3 to 5 years. With respect to current market price, I think SBI card can be a good multi-bagger story. Again, the multi-bagger can be a 1x from current levels, which is trading at almost 830, 840 levels. So for me, a 1,200, 1,500 can be a story because of the consumption story, which will be panning out from next financial year. I think a lot of credit card business will be very much in action. So the only one pure listed company would be SBI card. Obviously, the return will not be 3 to 4x, but it can be 1x from the current levels.
Okay, thanks for that view on SBI cards, Prashant. Now we have a caller from Bengaluru. Hi Ray, good evening.
Hi, good evening.
Yes, how can we help you? I'm very good.
Yeah.
Please go ahead with your query, Ray.
Yeah, so I had purchased 15 shares of PB Fintech about 2 months back at 2100.
Right.
And since then it has been coming down,
yes,
although it seemed to have a good prospect at that time.
Mm-hmm.
So I just want to know whether I should continue holding the stock because it has not gone up despite the market rally recently.
Yes.
Or should I move out from this stock and purchase some other stock with a 6 month to 1 year time frame?
Okay. And when you initially bought it, so you wanted to hold it for a year or so?
Yeah, right.
Okay. So you're a long-term investor. Prashant, I'd come to you directly. Currently it's trading at 1,398 and rightly said that, it peaked in the first week of January, but since then it has seen a very sharp fall. So what do you have to say about this counter? Are you really bullish on this for the long term?
No, I'm not so bullish on the company again, as well as the business model, because I think a lot of high competitive sector, a lot of new companies are coming into this space and having this online business, insurance policy businesses. I think even government is planning to do some kind of control on the commission wise. So I think government is trying to push a lot of insurance companies to reduce their commission charges to platform like this because of the high competition. So that will bring a lot of business downside for the company. In terms of valuation, again, it's trading at a very high digit 3x P, and with respect to book price to book value, again 10x. So not comfortable to say any positive view on this current price. Obviously, one should wait for a good correction more from the current levels, then think of this business. Otherwise, kindly avoid this stock.
And are you really looking for this entire insurance space or just PB Fintech in particular?
Overall, in terms of a platform company which is selling third-party insurance, I am negative on that.
Okay, so that's the view for PB Fintech that we are looking at. Next, we have Santosh, who's calling us from Mumbai. Hi, Santosh. I hope I'm audible to you. Please clear your query.
Yes. My query is I have 200 shares of Newgen.
Right.
Bought at 900. I'm a long-time holder for about 1 year, Would like to know the future of this stock.
Santosh, can you repeat the number of shares that you hold in this counter?
200
shares.
Bought at 900.
Okay. And when did you mark a fresh entry in this counter?
This I think I bought more than a year back.
Okay, more than a year back. So let me take this across to Prashant to understand his view. Santosh currently sitting at a profit of around 18,000, wants to understand the view for Newgen Software. Now, if I'm not mistaken, in the company's Q3 update, there was a concern on the execution which could affect its growth trajectory going forward. Prashant, want to understand from you, what's your overall view on this one?
Despite the concern, I'm very much positive on the company with respect to its business model. It's a global software company which is engaged into software product development, designing and delivering end-to-end product solutions for the global clients. So only one concern with respect to the downside would be the IT, which has the weightage towards the global markets, not into Indian business model. So that can be one reason why the stock can underperform in the market. But downside is very limited from the current levels. It may be around 900 to 850 levels. So I think that can be only a reason why the stock can come down. But overall, I think he is still in profit. I think anything upside from the current level, at least 5-10% upside, he has to try to book his profit because of the concern in the company.
Okay, and Gaurav, your view as well, are you optimistic on the stock?
Not pretty much, although some little bit of consolidation is visible, but still I would say that if any rise towards 1,140 levels should be considered as an exit.
Okay, so thanks for that view, Gaurav. With that, we have a caller from Bengaluru. Hi, Abhinav.
Hi, very good evening.
Good evening. Please go ahead with your query.
Yeah, see, I am kind of bullish on the EMS sector if I look, let's say, 2 years or 3 years down the line. So I have 3 shares of Dixon Technologies as of now. I was hoping to add more as well.
Okay.
So just wanted to understand if this is the right time wherein I can, put more money given the valuations and everything.
Okay.
And at the same point in time, apart from Dixon, if there could be any other company in the same space which I should focus on.
And are you looking for a long-term picture on it?
Yes, I'm looking for long-term, at least, let's say, 3 to 4 years.
Okay. So Prashant, again, a long-term query. So a lot of fundamental queries on the show today. Dixon Tech, it's currently trading at 13,911. So are these the correct levels to accumulate more since he's already holding 3 shares at 18,000 rupees?
I may not comment more on the levels at this point of time because fundamentally things are still very great in terms of their business model. The way they are getting lot of queries and lot of outsourcing inquiries with respect to new models from China as well as Japan to manufacture in India. That visibility is very strong. I think for a long-term view from here again 2 to 3 years, this stock can even double from the current level. So, but right time, right level, I may not be commenting on this because of the valuation. Again, it's trading at 130 P. Price to book value is almost 37 times. So that would be a concern for me to advise him to the right level. But obviously, every dip should be added considering a 2 to 3 year view for doubling the story.
Okay, so right time and right level is what Prashant is saying for the long term for Dixon Tech. Gaurav, do you also hold the same view for short term?
Yes, Dixon is very well placed at current levels, currently consolidating, though in a narrow range. But I see once the stock is able to surpass 15,000 mark, it has good potential to rise up to even 18,000 in the immediate near term itself. So I would say that that he should hold on to your position, and even if there is a little decline, he should consider adding it up.
Okay, very interesting take on the overall EMS space and something like a Dixon Tech in EMS. But moving on, we have Rohit calling us from Karnataka. Hi, evening Rohit.
Hi, good evening everyone.
Yeah, please state your query.
I have Sagility India.
Yeah, can you describe to us how many shares do you have and what price?
Yeah, so I have 1.28 quantity at average of 46.97.
Okay, 36.97. Okay.
46.97.
Okay, it's 46. Yeah.
One is their promoters have pledged 100% on this. So the view on that, and then possible both short-term and long-term view.
Okay, both a short-term and long-term view is what you're looking for. Let me go across to Prashant for the fundamental take on Sagility India. This is a recent listing and we've seen a couple of brokerage notes being bullish on this one counter. While Rohit did point out on the issue of pledged shares, I want to understand your view on this counter.
Obviously, when there is a pledge issue, which is almost 100% of the promoter holding, is a matter of concern for me. But overall, I think with respect to its business model, very positive. It is servicing all the US clients. So I think the growth in the US with respect to healthcare services, I'm very much positive on that. So for me, even though the valuations are slightly higher at 90x in terms of PE and price to book value. Hello?
There's a yeah. You're audible to us now, Prashant.
Yes. So Sagility in terms of valuation, despite it is trading at a higher valuation, I'm very much comfortable to take this call because of the high growth sector that to servicing in the US market. So I advise him to hold on, add more on every dips with a target of at least 65-70 with 12 months period from the current levels.
Okay, that's a tall target that we are seeing with Sagility India. But let me go across to Gaurav as well. Gaurav, your view on this counter?
Sagility is a relatively newer listing. The data for the chart formation is not clear, and with whatever I could understand is yes, it is. It has retraced from its peak that was somewhere around 56, currently available at 43. So if it is able to sustain above 46, then yes, it has potential to rise up to 52. But I would say that the viewer should maintain a stop below 38 for a trading position.
Right. Thanks for that view on Sagility India. With that, we have a caller from Hyderabad. Hi, Pranav. Good evening. Pranav, am I audible? I think we've lost the line there, but we have Pranav's query with us. So he's bought 4 shares of ITC Hotels at 173 and he's looking for a long-term view on it. So since ITC Hotels is a recently listed company after the demerger, Prashant, is ITC Hotels looking promising for the long term?
Obviously, yes, I'm very much comfortable to advise my clients or anybody in the show to have ITC as a portfolio stock for a long-term holding. The assets are very clear, I think, with respect to the long-term growth, and the placement of the assets are very much, very demand catching sites, I think. So that would be one reason why one should accumulate the stock. Second, again, with respect to valuation, with respect to the EV by EBITDA, I think it is trading at the cheapest way, even below the lemon tree valuation. So I think that would be one reason why one should try to add the stock. Again, the brand image of ITC will continue to help the company to grow faster. In the demerger cycle, the company has got almost 1,500 crores of transfer cash from the company, so that can be utilized to grow faster in terms of the competition. Obviously, valuations are very supportive. A downside is very limited from the current levels, and I think with a 2-year view, the stock can deliver you at least 20-22% CAGR.
Okay, so that's the view for ITC Hotels that we are looking at for the long term. But now moving to a WhatsApp query that we have. This is Vivek writing to us from Tamil Nadu. He holds about 2,030 shares of Karnataka Bank at a price of 231. Let's just pull out the price of Karnataka Bank. So currently the viewer is facing a loss of 1 lakh on this counter and wants to understand his short-term positioning of it. So let me come across to Gaurav for this one. Gaurav, should he continue to hold on this counter? What's your outlook here?
Yes, this is the time to hold on to this counter. Respite has already been witnessed, 165 to 180 levels that was touched and tested today itself. I see it heading towards 190 195 zone in the immediate near term, so better to hold on to the position.
Okay, thanks for that view on Karnataka Bank, Gaurav. We have a caller from Mumbai now. Sanjay is calling to us from Surat. Hi Sanjay, good evening.
Yes madam, very good evening.
Yes, how can we help you, Sanjay?
Yeah, I have Vishal Mega Mart.
Okay.
190 share at the rate of 78.
Okay.
And it's a issue allotment, madam.
Yes.
It's listed on NSE.
Yes. Okay, and why did you go for Vishal Mega Mart, Sanjay?
Because at that time, many fundamental experts advised to invest in this stock. That time when this issues come.
Okay.
Yeah, so
currently it's trading at 104 levels. Prashant, again, I'd come to you. Are you really bullish on this company for long term?
The sector, I am very much bullish with respect to the hypermarket chain. Vishal Market is rightly placed to get this consumption story back to its portfolio. Yeah, so I think that would be the one reason why I'm very much bullish on this stock. With respect to valuation, obviously, yes, there is some kinds of concern. The growth has to come from next financial year and currently trading at 100p, which will be stopping me to advise him to add more. But obviously, if he's already added, I think he has to hold on to the current levels and wait for at least 12 months from the current levels to get more upside from the current markets.
Okay, Prashad. And quickly, a short-term view on Vishal Mega Mart, Gaurav.
For Vishal Mega Mart, it is very, very important that it sustains above 110 levels. If the stock is able to surpass that mark on closing basis, then a further rise towards 125 is not quite possible. Otherwise, it will again slip towards 95.
Okay, so that's the view that we are seeing for Vishal Mega Mart. But it's time that we slip into a short break. Keep sending in your queries on WhatsApp at call in. We'll be right back for Ask Profit. So stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the branding also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Welcome back, viewers. You're watching Ask Profit on NDTV Profit, and on the show we are joined by Prashant Tapse on the fundamentals and Gaurav Sharma on the technicals. So viewers, please don't miss your chance to get all your stock related queries answered. Pick up your phones and call us right away. With that, we have a caller from New Delhi. Hi Rakesh, good evening.
Hi, good evening. I have a query regarding Bajaj Housing Finance. I hold around 7,400 shares at the average price of 121.
Okay.
And I'm willing to buy more, but can you predict the future? How is it going to be? And
right.
How is this second question? How is this company going to be as compared to LIC Housing Finance?
Okay, because Rakesh, at the start of our show, we've already discussed about Bajaj Housing Finance, but still, since you've called, I'll still cater to the query. And you're also looking for LIC, am I correct?
Yeah, LIC Housing.
LIC Housing. Okay. So, Gaurav, I'd come to you on this. Since you've already spoken about it, so if you could just repeat the stance on Bajaj Housing Finance and LIC Housing.
Yeah, sure. For Bajaj Housing, it is at good attractive levels. Consolidation is being witnessed at lower levels, which is a good sign. For fresh buying, and as you have said, you want to add more. So wait and let the stock surpass 120 odd levels, then you can start adding up the stock, because then it would have a clear-cut potential to rise up to 135 odd levels in a very short span of time. Now, when comparing with LIC, so LIC is also very well placed. So even at current levels, it is looking quite attractive. Reasonable retracement is also witnessed. So I see it heading towards 600 odd levels in the immediate near term, say about 2 to 3 months, or even quicker than that.
Okay, and Prashant, for the long term, what do you have to say on both these companies?
With respect to the sector, I am very much bullish on the housing finance, because I expect next 2 years there will be huge growth in terms of home sales. So I think that will be morely financed by LIC, Bajaj Housing Finance, as well as SBI, as well as HDFC Bank. So with respect to valuations, there is a huge gap between Bajaj Housing Finance as well as LIC Housing Finance. Obviously, because of the culture, Bajaj Housing Finance has a high growth potential. From last 7 years, it has grown by 30-35% in terms of their AUM, but LIC is still struggling to get its double-digit growth in terms of growing their AUM. With respect to valuations, again, LIC is trading at less than 1 price-to-book valuation, which gives a very clear vision of valuation very cheaper on this point of time. But I would advise him to have both stock in his portfolio. With respect to valuation, LIC looks very great. With respect to growth, again, I think Bajaj Housing Finance can give him a fast growth. So both should be part of his portfolio.
Okay, well, that's the view for some of these housing finance companies out there. But the next query is from Rohit from Mumbai. He holds about 125 shares of Reliance Industries, and this is at a price of 1,220. Now, if you see what has happened to the stock today, the stock was over. If you can just pull out Reliance Industries stock price, we've seen gains of over 3% in trade today. The stock closed 3% higher. And also there was a brokerage note which was in focus wherein the stock had been upgraded. I'll go to Prashant on this counter. Prashant, what's your view on Reliance Industries?
Due to the last 10 years underperformance, obviously the stock looks very attractive at this point of time. Again, the positivity comes from the oil sector. Again, the GRM margins are trying to improve. The Singapore GRM margins are helping this company to improve their EBITDA margins in the Q4 earnings. That would be the one reason why the two brokers, one is Jeffrey and another maybe Kotak Institutional Research Report, has come out with an upgrade target with them at least by 22% from the current levels. And obviously because of the heavy weightage in the market, obviously a lot of money is flowing into this company. So that is giving this stock to trade on a positive trend. Fundamentally, yes, I think very long-term story. Yes, obviously one should look at this point of time, but with the short-term view, I think 1350 can be the best target for the Reliance Industries.
Okay, 1350 is the target that we are looking in terms of where the fundamentals are concerned. But even in technicals, let's see what's the view here on this large cap.
Pretty much clear with what Prashant has said. I think he's also looking at charts right now. 1350, 1360 is also the technical charts what they are suggesting. So 100 points move we have already seen in the past 3 trading sessions. What I see is that this up move momentum should continue to 1320 and 1350, 1360 odd levels.
Okay.
So it is a buy on current levels.
Yeah, thanks for that view on RIL. With that, we have a WhatsApp query from Bengaluru. So Satya has written to us saying that can he buy Tata Technology at current levels? So, currently it's trading at 672. Which is near its 1-year lows. And in the last 6 months also, it has seen a downward trend. So since Satya has not mentioned the time horizon, I'd like both the technical and fundamental view on it. Firstly, coming to you, Gaurav, on the technical front, how is it faring on the charts?
Pretty much negative, clearly lower lows, no respite whatsoever, no consolidation whatsoever. I'll say it is better to avoid.
Okay, and so do you have any other suggestions?
From a technology point of view and from an IT point of view, there are a lot of companies that can be considered. This has a very vast business. So if I stick around with an IT space, I would go with Coforge. I would go with TCS for that matter.
Okay, so Coforge and TCS are the picks for the short term by Gaurav. And Prashant, coming to you on the fundamentals of the company, are you bullish?
No, I'm also not bullish on this company, considering two factors. One would be the valuation at this point of time. Even the return ratios are not so attractive at this point of time. Second, again, the quarterly earnings, Q1, Q2, Q3, all three were not so good. The management has given a lot of confidence with respect to their Q4 earnings that will be better than Q3. But even though the company is servicing a lot of global automobile companies where the clients have shortened their targets with respect to spending on the technologies. So that would be one reason why I see this the EBITDA margins as well as the top line growth in Tata Technologies can see some kind of neutral to negative growth. So that would be one reason why I am expecting stock to fall more from the current levels. If the client has not still acquired the stock, better to avoid the stock right off at this point of time.
Okay, so that's the view for Tata Technologies. Overall, a muted outlook or overall a negative outlook on the stock that we are looking at. But moving on to the next query, this is from Balaji from Chennai, and he wants to understand the overall long-term picture on a stock like Sundaram Finance. Prashant, I'll come to you. What's your view here?
Sundaram, obviously, finance as a sector, there's a lot of opportunity in the market right now. Obviously, the stock is trending very positive at this point of time. Sundaram Finance or Sundaram Brakes?
Talk about Sundaram Finance for now.
Obviously, yes. So I think that would be very positive for me at this point of time. Even the valuations are very much great. With respect to NBFC or any other companies, I think the liquidity push is good from the RBI. That will give a lot of room to grow for next financial year. Obviously, the way how RBI is helping to get a lot of liquidity in this sector, this will affect a lot of business growth in the Q1 earnings of next financial year. So if anybody would like to hold it for at least for shorter period to medium time, I think there can be a 10 to 15% upside from the current levels.
Okay, so that's a view on Sundaram Finance by Prashant. With that, we have a caller from Ghaziabad. Hi Ajay, good evening.
Good evening, ma'am.
How can we help you, Ajay?
I have Godrej Properties 30 shares at the rate of 2,508.
Okay.
So what is the long-term and short-term perspective on
this? And when did you buy it exactly?
Just 20 days back.
20 days back. So in just a span of 20 days, you're sitting on a loss of almost 15,000. There's what I can see. Today also, Prashant, the stock was down over 2% and it's currently trading at 2008. So what do you have to say on Godrej Properties? Are the fundamentals looking promising?
Very promising. Fundamentals are very strong with respect to a long-term story, but obviously the way how markets have performed the last 3 months, a lot of real estate companies have underperformed. The whole sector is down by 20 to 30% in terms of the recent top and the recent bottom. So I think that would be one reason why markets are not performing. A lot of money is not flowing into real estate. That can be the one correlation one should look at even when they invest in the real estate markets. But obviously downside is very limited from the current point of time. There are a lot of projects which are going to come out with good top line growth for next 6 months. So I think if there is a little bit of more sell off from the current levels, the client has to add more at this point of time.
Prashant, in terms of real estate sector, there has been a mixed set that overall we are seeing now some companies, they are expected to exceed their FY25 pre-sales and the launch guidance that they have given, while the others, like which includes the likes of Prestige Estates or maybe say a Kolte Patil, Aditya Birla Real Estate, there are chances that if they do not accelerate their pace of launches in the fourth quarter, they might miss out on their guidance. So want to understand from you your picks in this sector, considering that these concerns are there, even the lack of approvals have been a challenge for this sector, and we've seen quite a bit of correction that as you've mentioned. So just an overall view.
Obviously, one should take an advantage with respect to the correction in the real estate sector. I think with our pick, I think we are very, very much bullish on Oberoi Realty with respect to valuations, as well as the pre-sales, which has actually outperformed in the last 6 months. So I think Oberoi Realty would be the right stock for me as a fundamental analyst, again, to look for a decent 15-20% growth for next 12 months.
Okay, so that's the view for overall real estate that we are seeing. Now moving on to the next query, we have Shyam writing to us from Andhra Pradesh. He holds about 37 shares of Fintech, and this is at a price of 1,077. Wants to understand the 6-month outlook on this counter, currently sitting at a loss of around 5,000. Gaurav, your view on Fintech?
A recovery from the current levels is pretty much likely. Currently, it is trading somewhere around 930 odd levels. I see it heading towards 1,050 to 1,100 and then towards 1,250 marks in the next 6 months. So it is a hold.
Okay, so that's a hold on Fintech. For the short term. With that, we have a WhatsApp query. So Rajendra has written to us from UAE saying that he's bought 100 shares of Adani Green at 905 a piece. So he's looking for a 1-year view on it. Prashant, I'll come straight to you. How are the fundamentals of Adani Green looking like? Are they promising?
With respect to valuation, not so comfortable. With respect to projects which they are into, very much looking forward for a great business model from the current levels as well. Obviously, I am waiting for some more correction in the stock because the valuations are almost like 90p from the current levels, 12 price to book value. Not comfortable to give this kind of valuation at the current point of time. I'll be waiting. I will take a wait and watch the strategy for the current price and then take a call on this. Fundamentally, obviously, a long-term story is building in. A 3-year plus story, one can start accumulating on every dip.
Okay, just a quick note that NDTV is a subsidiary of AMG Media Networks Limited, which is an Adani Group company, the channel that you're watching right now. Again, moving to the next query, Biren from Thane, his query is on Gail. He holds 100 shares at a price of 183 and wants to understand the 6-month outlook on this counter. Gaurav, your view on something like a Gail?
From a 6 months perspective, one can gradually start accumulating the stock from the current levels and start adding up around say 170 and look for targets close to 190.
Okay, so that's the view on Gail. With that, we have another WhatsApp query, which is written to us by BJ Kulkarni from Bengaluru. He holds 25 shares of HAL at 3,800 rupees. Currently, it's trading at 3,452 and was up 1% today in trade. Prashant, coming to you, since he hasn't mentioned the time horizon, I'd like to take both technical and fundamental view on it. Firstly, I'd like to go on the fundamentals. What do you have to say on HAL?
I think the recent cover up in the price was only because of the way how the Atmanirbhar industry, which is performing well when there is a fear of Trump tariffs. So defense stocks, railway stocks have been seen a good rally from last few days. So HAL is a very favorite stock for me in terms of defense with respect to its order book. Obviously, there is a good strong visibility, but again, one should wait and watch for Q4 earnings. One should look at the EBITDA margin stability as well as the top line growth. But overall, again, if a long-term story has been considered in this stock, I think the 5,000 rupees can be a stock at least for 1 or 2 years from the current levels.
Gaurav, in a lot of defense counters that we are seeing, the main emphasis is on Q4, as you've mentioned, because in the first 3 quarters, like something even like a Zen Tech, which pointed out that there would be more order inflows flowing in from the 4th quarter or the 1st quarter of this year. If those order inflows are comparatively muted, what would be the outlook be for the defense sector?
I think, see, it is very important, always very important to check out what the final earnings come in. But, charts are also suggesting, say, for example, if you look at HAL for that matter at current levels, it is fine to take a bet here. The viewer is having a buying price of, I guess, 3,800 if I'm not wrong. So, yes, I see the stock heading towards 4,000 odd levels. And as far as, your order book's concern is there. For a defense kind of a thing, this is already there and the stocks have already been beaten down. So I don't really see a much of a downside coming in the near future. Having said that, if the market drops drastically, then of course that's a different story altogether.
Okay, so that's the overall view for the defense pack that we are looking at. But next we have a caller joining us, and this is Siri from Hyderabad. Hi Siri, how can we help you on the show today?
Yeah, I'm Siri.
Siri, yeah.
I hold the share JBM Auto.
Okay, and how many shares do you hold in this counter?
I hold 200 shares at the rate of 400 rupees.
And you want to understand the outlook for the short term, I believe?
Yes.
Okay. Okay, so let me take this across to Gaurav. Gaurav, your view on JBM Auto?
Quite a lot beaten down stock. A straightaway fall from 1100, 1150 to currently trading around just below 550 odd levels. Not very encouraging technical charts. So it's better to wait and watch for some time. Take a stop at 498 and just hold the position because the stock needs to consolidate and then build up. As of now, not very gloomy picture. Better take a stop below 499.
Okay, so that's the view on JBM Auto for short term. With that, we have a WhatsApp query. So Gul has written to us that he has bought 15 shares of Nesco at 904, and currently the stock is trading at 920. So again, Gul hasn't mentioned the time horizon. So firstly, I'd like to come to you, Gaurav, on the technical front. What are the projections on the chart faring like?
A recovery can be seen in the immediate near term till 960 to 1000 odd range. So yes, it is better to hold on to the position and look for targets close to 1000, 1050 in the immediate near term.
Okay, and Prashant, is it strong, the fundamental aspect of Nesco?
Obviously, yes, it is servicing into the IT park. So I think there are a lot of rental income as well as the future outlook of the IT industry in India would see a lot of expansion plan. With respect to valuation, again, I am very much comfortable right at this point of time, both in terms of P, price to book value, as well as their return ratios, very much comfortable to advise a client to add more at this point of time. The upside would be limited again because the growth is very slow. I have seen the last 3 quarters, the numbers were almost flat. So I think we should wait and watch for again a Q4 earnings, which should give some kind of visibility for next financial year.
Okay, so that's the view for Nesco that we are looking at. But again, in the real estate space, another counter which is in focus is Mahindra Lifespace. Jyotishwar from Andhra Pradesh wants to understand whether this is the right time to buy this stock. Now, if we see in the last 1 year, the stock has seen a 41% of a decline. Gaurav, want to understand your view on this counter?
It is trading very close to its crucial support levels. What I can see on the long-term charts is a triple bottom formation is clearly there on the weekly charts. So yes, I would say one can take a chance here of adding the position and hold for some time, at least for 6 odd months. Then one should consider buying it here, keeping a stop at somewhere close to 295 odd levels and look for targets close to 450.
Okay, that's the view for Mahindra Lifespace that we are looking at. But thank you, Gaurav. Thank you, Prashant, for joining us and sharing your outlook and perspective on all these counters and queries that were given. But with that, it's a wrap of this edition of Ask Profit. But with International Women's Day tomorrow, time to take a stock of women consumers. Did you know that women account for an incredible 85% of global consumption spending? NDTV Profit takes a closer look at whether brands are truly meeting the expectations of their female consumers. My colleague Sesha dives into this report.
In a world driven by consumerism, one group stands out as the undeniable powerhouse of the market, that is women. From fashion to technology, they represent a crucial target for brands, many of which are honing their focus to seize the women opportunity.
Women account for a staggering 85% of global consumer spending, as per a recent report by the Boston Consulting Group. In India alone, the shift has been remarkable. A decade ago, women's education achieved parity with men's and now exceeds male enrollment. This progress, combined with increasing workforce participation, has led to a more discerning cohort of women who possess greater financial power. They are now able to make purchasing decisions that align with their values and aspirations. And India Inc. can't afford to ignore the needs of these informed consumers.
We have women in all functions, whether it is sales, massive numbers in product development, supply chain. We have 2 of our lines run exclusively by women in our Haridwar plant and in our Bangalore plants. And any function that you look at in last mile mobility, we have women.
But despite the influence, there's a disconnect. A Cantor study revealed that 72% of Indian women feel brands don't understand them. They feel with men controlling the advertisement narratives, many brands fail to accurately represent the evolved identities of today's women.
Brands definitely do whatever they think will sell their products. And with women growing numbers in financial freedom space, so they're definitely using our face on their ads, representing us more. But there is still a stereotypical notion of us buying makeup, us buying kitchen household. There are some brands who are achieving the goals of representing women in a better space. But I think according to this situation, they also need to be more authentic, put more efforts in showcasing women as a part of equal representation.
Overall, if men should hire more women, and whenever they are writing or they are looking out for any particular product per se, and then they are working on that particular product, they should always think about how women would feel while they are going to use it or while they are going to buy it. What is their mindset? What do they think about it? Is it the sustainability? Is it about the eco-friendliness, or the packaging of it, or how attractive it can be? Because women do tend to fall for these cute little things, which is kind of missing from the financial sector altogether, or other sections, banking or these things, so that it becomes a little boring, and that is how it is related with women, that women might not be interested in it.
However, there is good news. Brands that do listen and adapt are reaping the benefits. According to Harvard Business Review, women-led startups consumers see 37% higher returns.
See, with so many brands spending so much of money, they must be resonating with women, otherwise why spend so much of budgets? That having been said, I think, some ads have continued to be successful because they've followed a particular formula. So for 70, 80, 90 years, Lux has always been Filmi Sitaron ka Saundarya Sabun, right? So that formula continued to work, still works. It changed gears with Dove coming in with the real woman, real emotions, real people. That has done well. Now you have newer players like L'Oreal or Mama Earth or whatever. They're trying to portray a much younger woman, a woman who's